If you're a London session trader, then Asia liquidity strategy is one of the best strategies you can adopt to your trading. Because in this GU, for example, in this European and American pair, the market is usually sleeping in Asia. Alright? Because this is a European and American pair again. So, it basically follows the AMD principle, accumulation in Asia, you might have your manipulation in London Open, and then your distribution at New York, maybe, or the rest of the day just. So you got your A, your M, and the distribution. Alright? If you haven't watched my session videos, go watch it, the 5 secrets of the sessions. And session liquidity is an important thing. It also works for London, New York, every session. But the Asia session is the most significant because it's their range that's going to tell you where the market is going to go. Because once we get to London and once the market starts to get some volume, you wait. The principle of the strategy is you wait for either the high or the low of Asia to get taken. And once you see one get taken, we have enough fuel, enough liquidity to go search for the other. So as soon as we take the highs, you look for short. As soon as you take the lows, you look for long. But here you have to know the bias of the day. And so the bias of the day was here, the inducement of the day, for some time, that delivered the move for the price to go here. But then you can't just focus. Again, this is a important strategy, but you can't just focus on simply breaking it, break a structure, and shorting from here. And you also got to zoom out for the higher time frame. It's way more complex than this, but this is just a principle. We'll get further on it. Alright? Just to show y'all another example, this is every single day. Most of the times it is like this. You see Asia low get taken, and then we have enough fuel to go look for the highs. This also comes with the fact that we're creating traps in the market. We're breaking structure lower, and we're incentivizing traders to come trade this. People that know nothing about Asia liquidity, they will maybe place their orders here. And then, I mean, it's not maybe, I'm sure, because the market just tells you that. Why do you think the market moved impulsively like this? It's because a lot of people were shorting. We have enough fuel to buy with a lot of lots, and this is a buy to sell. Is an indication that the price was manipulated here by the move of it. Alright? And what I was telling you about, it's not as simple as just watching one session, one of the Asia sessions get taken and buying or shorting from there accordingly. It's way more than that. It comes with smart money traps as well. Back in the day, maybe it would work. Today, it's even harder. So, for example, here, you watch how it get taken here. Alright, but here, we're in Frankfurt. In here, I think, no. In here, we're in Frankfurt session. Alright? 8 a.m. European Central Time. We take it, and we give you some incentivization here that we're going higher. You may be starting to trade Asia's liquidity strategy, and you place yourself here. And then you get stopped out because you're not reading the traps and putting a whole bunch of factors in your other confluences in your trading. Sorry. So here we broke the liquidity, but we need to break it again as a smart money trap because everybody's seeing it. Alright? And also because here is Frankfurt. And what did I tell you about Frankfurt session in the other video? Frankfurt session usually builds traps or liquidity for London Open. As soon as you got London Open, you got this big impulsement, alright, to the downside to trap everybody that's placing themselves here. And then you watch this beautiful reaction to the upside. And again, impulsement. Why? Because people are seeing this and probably placing themselves around here because price is going lower and they're looking to take advantage of the shorts. But this was just a liquidity. And maybe they were long in here and they were right all along. Then they started to short as soon as they saw this. right? Because London Open, the first 30 minutes are usually manipulation. Price goes crazy. It usually takes out Frankfurt lows or highs or the London session, as we're always seeing. So this was the inducement of the day, usually at London Open. Sometimes New York sometimes you might see London do the inducement of the day, like this case, where it just takes out the Asia session, in this case the low, and then it ran up all the way for the rest of the day. But in some cases, you might have the inducement for the London Open, for example. It takes out the other part of Asia, and then New York just comes and likes to take both liquidities out or move a different way. Because liquidity sessions are also important. So London likes to take out Asia, New York likes to take out London. And New York might also take out Asia session if we don't take them both on London session. That's something you gotta watch out for. But one thing I can recommend you to do is have an Asia session indicator. All right, something along the sessions indicator in your charts, so you can read price action better and see where the liquidity needs to get taken. You're not gonna get my indicator unless you work personally with me, because this is like 20 indicators in one. You can see I have the indicators as the boxes. You can see I have the kill zones. I can even have the sessions more detailed. London, New York sharp timing, New York. But then again, like, you need a script for this. And I'm only giving for people that's working personally with me. So if you want to work on one-to-one with me to fast track your progress to become a profitable trader, hit me up, or you can find a link in the description that will take you to somewhere where we can talk. And so let's dive deeper into it. It's not just Asia lows or highs as well. In some cases, you might have things from the past day that are also relevant. So in here, we have the Asia highs and Asia lows, but they're kind of in the middle of nowhere because we have this high right here and this high right here. All right? So it's things to keep in mind, because you can see how irrelevant the highs and lows were. Because here, we took them out, yes, in Frankfurt, and what's Frankfurt doing? Building liquidity. It's taking out Asia high, telling people, all right, we took Asia high, we're making a breaker structure, place yourselves here as we're going short, and the whole bias is bearish, so guys, take advantage. And then London comes and take them out and gets to this high, and then price moves lower. And once it takes London, maybe it's this, like, maybe this took it. It'll give you some incentivization, but then again, it needs to take out this one because it's more relevant. So there's also another point to keep in mind. Just zoom out. It's not just Asia high, Asia low. There might be highs and lows from previous day action that might be more relevant than Asia highs or Asia lows. And here, what do we have in this case? Same thing. Like, we're seeing Asia getting taken, and then you can see like these structure, breaker structure. You can see how this wick came below this. Might be a trap, all right? And it was London Open, as you can see. And then more traps, because here, like, we're giving this high, we're taking this breaker structure. People might be seeing this, but what they don't know is that previous daily highs, previous daily lows are also liquidity. So this will also get ran. And then again, Asia session in here, it's irrelevant because there's literally a high next to it. But in some cases, you might have some major liquidity that was taken here, for example. All right, let's assume some major liquidity was taken here from higher time frame. And then there's something like this, inducements, and then Asia session took it, but might be a trap. Let's say you forget about this. Let's say price was here, took out major liquidity, come down, we have order block, price takes out Asia and then moves lower. Maybe it can work. Maybe it can come here and then deliver the move lower. It can work because it's possible. Here we took out liquidity, we can test it, and we will go down. And we took out Asia liquidity as well. But some cases price likes to, like in this one, take out previous daily highs, previous daily low. It's also liquidity, so you gotta watch out for that. And as soon as we take it in the middle of London, and then you get some reaction. But then here it comes NFP, if I'm not mistaken, and it gives you a trap. Because here in higher time frame, I think we're testing something out. I think we're testing some of these blocks or something. But here is just a smart money trap, right? Because here we're incentivizing people that we're going lower, and as soon as we take them out, we have enough fuel here to deliver the whole move to the downside. And so we're always breaking Asia highs, Asia lows every single day, most of the days, because sometimes you might have examples where Asia session is just a continuation of the day, where London and New York just continuates the move in London, like in here, for example. We didn't see highs and lows get taken because the whole move was bearish. But I mean, in this case, we already have enough liquidity for the day to deliver the move. It's just that price going to take this out, alright, and then continue. Because here we're just following the liquidity structure, taking liquidity, going lower, take a liquidity, going lower, take a liquidity, going lower. That's how I teach price moves. So the main thing in here is that imagine you have your Asia session. You have your Asia session right here, okay? Let's put it orange, for example. And what you want to do is wait for price to take out the highs. Let's say it gives you this, takes out the highs, and then gives you a movement to take out the lows. Alright? So here you got your little order block, you got your breaker structure. After taking out Asia highs, and you can pretty much place yourself here. Now this is the basic level, and to search for the Asia lows. Now this is the basic example. Now the complex one is price will do this. Alright, what the hell is going on? So fake breaker structure, taking people out impulsively. This became a trap, so this will become a trap, and it's a whole smart money trap cycle. And price will give you the real breaker structure here and then move lower. So here you got your true order block. These were all traps, and you get the correct move. Because in here you have the smart money trap, because everybody's trading Asia liquidity sessions nowadays, and so you're going to be a part of the 5%, top 1%, whatever. You just want to be apart from the majority. So in here they're seeing a liquidity getting ran of Asia, they're seeing a breaker structure, they're shorting here. And once they're out, and once these are out, once everybody's out, is when you want to be trading, because that's when the move is going to be delivered. That's where the actual smart money has gathered all the lots from taking people out, and then the move can be delivered, right? But this is a more complex subject, and if you want to know more about it, you can check my other videos, because I do talk a lot about smart money traps. Alright, hope you guys like it, hope you find value in this video. Leave a like and subscribe, comment if you trade this Asia liquidity strategy, and let me know how it's working for you. Alright, take care and peace out.